Hey guys, my name is Khan and welcome to the next chapter. In this chapter we are going to learn about multiple time frame analysis. What is multiple time frame analysis and which time frame you should use for the entry and stop loss and target. So this video is a very important, and in this chapter I will show you exactly which time frame we should use or not. As a day trader, we don't need to focus on different unnecessary time frame. You have to focus on few minor and major time frame which will actually help you to understand that how and why market is going on. So lot of people get confused when they analyze in higher time frame picture to lower time frame picture. They start with monthly, weekly, daily, 4 hour, and then they switch into the 15-minute and 5-minute. Then most of the time trader get confused. In this chapter I will show you exactly which time frame we should use and which is actually work. So if you are a day trader, then you have to focus on three types of time frame, which is the first one IM15, IM5 and IM1. IM15 we use for the higher time frame structure, and IM5 use for the medium time frame structure, and IM1 we mostly use for the entry type. IM1 and IM2 basically we use for the entry. So let's switch into the real chart, then I will show you exactly how we can identify them and how we can mark the structure. In this chapter I'm going to talk about only day trader. As a day trader, which time frame you should follow and what criteria you have to follow. So you can see here, this is our major high and this is our major low. Same is here, major high, lower high, and again lower low, lower high and lower low. So actually this is a simple thing, but how and when we can sell and what criteria you have to understand in a higher time frame, and what criteria you have to follow the medium time frame, and which criteria you have to apply M1 and M2. Correct. So start from here. You can see market momentum is a bearish. As I told you in a starting that price must be taken out the inducement before the sell. Same thing happen here. You can see this is our first inducement which is here, and this one is called our inducement, and market tap on here. Correct. After tap this supply zone, what you should do? You have to follow the entry type 1, which I already mentioned. If market tap on the supply and demand zone, then you have to follow entry type 1. Same thing is here, but this is happen only the higher time frame, not in a 1 minute. Okay, when market tap on the supply zone, then you have to switch into the IM1 time frame, which is here at this point. Correct. And you don't need to focus here in a like a 5 minute at this point. Correct. And not seconds time frame, but you have to follow this. This one is our IM15 measure high or low, market break the structure, taken out this inducement and tap on the supply zone. Then you have to follow the entry time frame, which is applicable here. Correct. So this is our first scenario when we can apply the entry time frame 1. Okay, so when we can apply medium time frame and what is the reason to use medium time frame and how we can use it. Correct. So once market tap here on a supply zone, okay, in case what happened, sometime markets did not tap this supply zone, just below it, and then market sweep this previous high and close above it, then you have to follow the entry type 2 and 3. Okay, then you have to apply the lower time frame entry M1 and M2. Correct. But if market mitigate this one, okay, and then what happened, market trying to push downside, market momentum is a bearish, then you can see in a M5, and this one is our M5 structure. Okay, in M5 price must be taken out this high before the sell, before the adding more position. Okay, once market sweep the previous high, then you can sell here. This is a more high probability entry. It doesn't mean that if market tap here, then you are trying to sell here in M1 and continue trying to sell M1, M1, M1. No, because market not follow any single time frame. Even M1, M15, 1 hour, 4 hour, daily, weekly, no matter. There is not fixed any time frame. Market never follow any time frame. Okay, so once market type here, then you can apply M1, M2. Okay, when market push downside, you have to focus and you have to wait for the at least taking out the first high, which is here. Once market taken out this high, then you can apply entry type 2. You can apply medium time frame. Okay, because this is our medium time frame. Market push higher and sweep this high, then apply entry type 3. Okay, but at this point you can switch into the M1 chart. Okay, then you can scale more position here, and then what happen, you can stack multiple position in M1. Okay, until broken this low. Okay, once market broke this low, then you have to wait for the another M5 taken out the high. Okay, so in this case market did not taken out the any high, but market taken out this major low. So once market taken out this major external liquidity, then you have to focus on the buy. Why? Is the reason is a simple. When market taken out the external liquidity in a bearish and bullish side, then market take a deeper pullback to the upside and downside before the buy or sell. In this case market is a bearish, so market taken out this all liquidity. Okay, then market trying to push higher, and same thing apply here, because this one is our first inducement. Okay, and everyone most of the time we are trying to sell here, correct, and we are trying to sell above it. But you have to remember one more thing, this high is here also, and this one is our engineering liquidity, correct. So these two criteria when we can sell. Okay, so first identify the major structure. Major structure is M15 as a day trader. Okay, wait for the taken out the inducement, taken out the engineering liquidity. Okay, then market apply into the entry types like entry type 1, 2 and 3. In this case, if there is anything available above it here, then you can sell here. Okay, but remember one thing, engineering liquidity is available above it, then very highly chances market push upside to taken out this liquidity before the downside. Extreme supply and demand is high probability. This one is our 50% chances. Maybe market push downside and maybe take a pullback and then push downside. Okay, so when market taken out this extreme supply and then apply entry type 2 and 3. So once market tap this supply zone, then you have to switch into the lower time frame M1 and M2 and then sell and stack multiple position until broken this most recent low. Okay, once market taken out the most recent low, then you have to wait for the medium time frame taken out the recent high, which is here, and then again sell here in M1, stack multiple position until broken this in this time frame. This is our medium time frame, correct. When market taken out the first low, okay, then you have to wait for the another pullback before the sell. I hope you understand what I'm trying to show. Let me switch into the real chart, then I will show you exactly that how you can trade. Okay, now let's see. This is our Euro USD chart in M15. Now you can see market momentum is a bearish, okay, and market pushing downside continue, and after big drop market create this lower low is here. Why? Because market taken out the previous low is here, and then what happened, market taken out this inducement, correct, and after taking out this inducement this low is a confirm. Okay, so this become our lower low, and where is our the next PY when we can sell? Now you can see this order block is here. Okay, because this one is already mitigated, okay, and this one is unmitigated order block, which is proper imbalance and clean order block. Okay, why I did choose this one? Because you can see gap between this candle, okay, and this is also known as the FVG and imbalance, and this is our order block, this is a lower low, and once market tap on this supply zone, then we can take entry for the sell. Okay, so at this point when we switch into the lower time frame, then we can sell at this point. First thing is, remember, wait for the break of structure, and then after break the structure, wait for the inducement and taking out the engineering liquidity and tap on the supply demand zone, and then we can sell into the lower time frame in M1 and M2. Okay, so right now we are talking about the M15. Okay, so this is a M15 structure. Lower low is here, lower high is here. Market tap on this supply zone, we can switch into the lower time frame at this point right here, and we can't switch here in a M1 because market did not tap any zone here. There is no reason to move in the M1, and some people do wrong thing is here because they are thinking that market is a bearish, they anticipating price push downside, but they randomly looking for the sell here and switching into the M1 chart and then trying to sell here for the short term. So first process is here, mark the correct high or low in a major time frame, which is M15, and then wait for the boss and chalk. Okay, so this is our major structure. I'm talking about this. Market tap on it level, and then we can switch at this point. This red circle is here, and we can switch at this point M1, correct, and then we can sell. Market break the structure and create new low is here. Why? Because market taken out the previous low, and this high act like a inducement, and this is our inducement, and when we can sell above this, where is our order block? And some people do wrong thing is here, they mark this is order block like this, correct, but this is not correct order block. Correct order block is here, complete big is here. Okay, if you refine it, this is our actual order block, this is our actual supply zone. Why? Because this high has been taken out by this candle. Okay, and this is our middle candle. Okay, inside bar is here. This candle did not take any previous swing high or low candle. Okay, so this candles actually taken out the previous candles low, which is here. That's why market tap on this extreme supply zone, and then market push downside. At this point we can switch into the M1 chart to see exactly what market are giving you. Okay, so once market tap on this supply zone, you can switch into the M1 at this point, not here. Okay, when you see in this zone, okay, lot of time market change bullish to bearish, bearish to bullish in M1 time frame. You have to follow the rules, you have to use M1 time frame on a specific zone, not randomly anywhere. Okay, so first thing, identify the high or low, then wait for the boss chalk, wait for the inducement, and wait for the tap on the supply and demand zone. Okay, and wait for the sweep the high or low, and then you have to apply M1 time frame. Okay, so once market tap on this supply zone, which is here, and next supply zone is here. Okay, this entire candle. Okay, so at this point we can use M1 time frame, and when we can use M5, because this is our medium time frame. As I told you in a starting, medium time frame we use after taking out the previous swing high or tap on the supply and demand zone, and then wait for the reaction. So as you can see here, market break this low. Okay, market break this low and trying to push downside. Okay, so this is our first indication for the reversal. And then when we can sell, you can see market move something like this, okay, and then what happened, market push upside and then create new low, taken out this low, and again push higher, taken out this high and then sell. Okay, as I told you in starting, this high must be taken out. After taking out this high, you can again sell at this point in M1 time frame. All right, once market taken out this previous high, you can sell here till this zone. You can add multiple position. Okay, when market taken out this low, until taking out this low, you can add multiple position in M1 time frame here, refine into lower time frame. Okay, and same thing apply here until taking out this low. I hope you understand what I'm trying to say. This is a very interesting and very important thing you have to understand. Let me remind you again here, like this, market is a bearish, correct? When market is a bearish, then market moves something like this. So this is our measure high or low, correct? And this is our measure time frame, and between this measure time frame, this is our minor time frame, which is here. So price, once market taken out the minor, once market taken out this medium time frame, this high, then we can sell here in M1. Then again taking out this low, and this is our break of structure. Between this high and between this low, you can add multiple sell position in M1 time frame, correct? When market break this low, then don't add any position in M1 time frame, because market take a pullback and then very highly chances your stop loss got hit or break even. Wait for the another opportunity. Same thing is here, market create a structure like this and taken out this high. Okay, this is a trap and inducement. So at this point, we can add multiple sell entries in a single candle mitigation entry and single sweep candle stick. There are different entry, okay, as I mentioned in entry types. So you can add multiple sell position at this point till this low has been broken. Once low is this broken, then don't add any position in M1, okay, because external liquidity has been taken out, and plus medium time frame liquidity also taken out. Okay, then you don't need to switch into the M1 to add more position. You have to wait for the develop more price action, because market never ever follow the any time frame, any single time frame. Okay, once market taken out this low, and then market create another structure, which is major structure is here. Okay, and then market must be taken out this M5 high, which is actual here. Okay, then this high create M5, this high create M15 structure, which is here. Okay, probably at this point, and probably at this point, which is extreme like this, and this develop structure like this. Okay, again same thing apply here. This is a very interesting and very important thing you have to understand. It's take a little bit time to understand. Please watch this episode again and again. This is a very interesting and very important. Okay, so now let's switch back onto the chart. I hope you understand what I'm trying to say is here. Again market break the major break of structure. So once market break the structure, major break of structure in M15, then market must be taken out the M5 high. So where is our M5 high? Which is here. Okay, because this is our M5 structure, correct? and right now this is a M15, but when you switch into the M5, then we can see this is our M5 high or low. So in this case, what happened? Market break this M5 low and again break this low, and this is our first inducement which is here, which is must be taken out to confirm the M15 lower low is here. Okay, and then what happened? Market taken out this inducement. Where is our order block when we can take entry for the sell? So at this point we can see, let me delete first this one is our extreme entry which is here, and this is our engineering liquidity. Okay, and this one is our inducement, correct? So these 2 points when we can take entry for the sell in this case. So what happened? Market taken out this inducement and something mitigate here in a little bit M5. Okay, you have to check in M5. In M5 structure, market tap on this supply zone and then market push downside. Okay, once market tap this supply zone, you can switch into the M1. When market taken out the first inducement which is here, then you have to wait for the mitigation. In once market mitigate anything which is here, or mitigate anything or sweep previous high or low, then you have to switch into M1 and M2, then sell and buy. Okay, same thing apply here, and at this point we can switch into the M1 and M2. If market did not push downside and did not give any indication for the reversal and trying to push higher, again tap this supply zone and then again switch at this point in M1 for the sell till this low has been broken. Okay, then you can stack multiple position. Once market taken out the previous low, then you have to stop your M1 scaling position. You have to wait for this high has been taken out, because this is our M5. Once market taken out this high, they can again you can sell multiple position. This is very interesting thing. I hope you understand. Now let me switch into the another chart. Again market break this structure. After break this structure, when we can sell, this is our first inducement which is here obviously, and after this inducement you can see market sweep this high. Okay, so at this point you can switch into the M1 chart at this point. Okay, once market sweep the previous high or previous low or tap on the demand and supply, then you can switch into the M1 chart. Okay, in this case you can switch into the M1 chart, and same thing apply is here. Once market tap on the extreme supply, same thing apply here. At this point you can switch into the M1 chart to see exactly what are market doing in M1. If everything is fit in your criteria, then you can sell or buy, correct? So this is happen here. And when we can apply medium time frame, as I mentioned, market must be taken out the previous recent high which is here. Like in this case we can see market break the structure is here, and then what happened? If market push downside like this, then market must be taken out this high. Okay, and this is M5 high. When market taken out this high, then we can add more position in M1 till this level has been broken. Once market taken out this low has been broken, then you have to stop your M1 entry. Okay, then wait for the develop more price action like this, again taken out this high and mitigate something is here, and again stack multiple position. Okay, so this is a interesting thing. So this is an example about multiple time frame analysis. I'm not switching any time frame because this is already in a lower time frame, because M15 is not a bigger time frame, but as a day trader M15 is our higher time frame, M5 is our medium time frame, and M1 is our lower time frame, which is used for the entry. Okay, so now let me switch into the putting all together that how we can use these time frame in higher time frame to lower time frame. Let me switch into the real chart to show you exactly how you can take trades. Okay, as you can see here, market momentum is bearish and creating lower lows, and once market break this structure, so after break this structure, market create new low is here. Why? Because market taken out the previous recent high. And where is our inducement, which is here? And after taking out this inducement, after taking out the engineering liquidity, we are looking for the buy and sell. If market is a bearish, then we are looking for the sell. If market is a bullish, then we are looking for the buy. In this case, market momentum is a bearish, so probably we are looking for the sell, at least after taking out the inducement. After taking out this inducement, market tap on this supply zone, which is actually taken out the previous candle high, which is here, you can see, and this big act like our supply zone, and this order block is also order block, but this big is our refinement, and we can take entire big like this. Okay, so this is also a good scenario, but for the refinement I took this minor refinement zone. Okay, this is also possible scenario, this is also good, but for the refinement I took this zone. Correct. So inducement has been taken out, tap on this supply zone, and you have to apply entry type 1, which is applicable on the supply and demand zone. Now let's switch into the lower time frame. This is a M15 structure, and when market tap on the supply and demand in M15, then you have to switch into the M1, which is already discussed recently. Okay, now let's switch into the 1 minute to see exactly how we can take trades. Okay, and if I take trades, and where is our target, you have to remember, and where is our stop loss. Okay, major target will be M15 low, which is here. Okay, so this is our major target. Correct, because market create equals low, and below this liquidity sitting below it. If market did not create equal low, then also we will set our target below it, which is M15 major low. Now let's switch here to see exactly what happening here. Market tap on this previous supply zone and give us a reaction, and at this point what you should do in this case, you can see market taking out the previous candle's high and take close below it. This is an indication for the reversal, which is applicable for the entry type 3. Okay, so in this case you have to sell here, just here. Open the next candle, we can sell here. Why? Because this is our entry type 3. In entry type 3, market price must be taken out the previous high, a low, and close above and below it. So in this case, market is a bearish, taken out the previous candles high and close below it. This is an indication for the reversal, and this is not enough because market tap on this supply zone. That's why this is our additional confirmation for the sell. Okay, if same thing apply here, then we can't sell here. Okay, because price already tap on the major supply zone, which is M15. Okay, so this is our entry, and this is first low is here, when we can switch our stop loss on break even and take little bit partial. And where is our final target, which is here? As I mentioned, M15 major low is our final target, and in this case you don't need to follow the advanced structure, you have to follow the general structure. Okay, so this is our general structure. If I switch into the 5 minute, then I will show you exactly. You can see here market create higher high, and this is our general structure between the major high low. You don't need to focus on the advanced structure, you have to focus on the general structure. Okay, because you have to take an aggressive entry. You have to take aggressive decision for the buy and sell, correct? So once market taken out this low, okay, then you have to move your stop loss on break even, because this is our recent low, okay, and actual structure is here, okay. Once market break this low, measure structure, because this is act like an inducement and this is our demand in terms of the medium time frame, because this is our M5. So once market break this low, then you don't need to sell any position in M1 time frame, and between this medium term time frame we can stack multiple position between this high or low like this, okay. If there is any possible entry, we can sell. Now let's switch into the M1 chart to see exactly when and how we can sell entry here. So first entry is here, correct? And now let's see what happened next. Market rapidly push our downside. There is no indication for the adding more position. So when we can add more position, this is our an area when we can add more position, okay. But in this range, I'm talking about this M1 structure, okay, between this high or low there is nothing develop here. If market create this type of situation, doesn't matter, this type of situation create liquidity for the push downside, okay. And some people aggressively buy here, they're trying to buy here and they are looking price, looking for the upside, break the structure and pushing higher high. No, this is our main move is here, and between this high or low happening, anything happen doesn't matter, okay. You have to wait for the develop a price action before the sell. So in this case what happened, price break this high, there is no indication for the sell. If you are trying to sell here, there is no logic for the sell. Why? Because market did not mitigate anything in it, and second thing, market did not break any structure, okay. So this sell is not valid here, and we can sell here if market close above it, and then you have to apply entry type 2, okay. And same thing apply here. You can see market again break this high and close above it. So in this case you can apply entry type 2 for the sell if everything fit in your criteria, which is already mentioned in entry types. And in a downside you can see market creating liquidity. And how entry type 2 actually work, let me remind you. So you can see once market close above it, okay, so this is an indication for the reversal, price must be close above it. So in this case market close above it, and then you have to wait for this first high has been taken out, then you can sell here, okay. So first sell is here, again market taken out this high, again sell is here, and this is our entry type 2, which is already mentioned in entry types, okay. So in this case we are already in M1 time frame, then you have to wait for the candlestick confirmation to take in previous candles high, then we can sell, okay. You can see here market taken out this high, and then after taking out this high, what happened here, market creating up and down side, and then finally market taken out this high, which is here previous candles high, and close below it. So we can apply here entry type 2, and as you know, once market sweep the previous candles high and then close below it, then you can enter on the next candle here, okay. And they put the stop loss just above it, and the safer stop loss is above it, okay. And the target is our major target is our M15 low, which is here, correct. And some people get confused here that why I did not take this one and why I take this one. Remember here you can see once market break this structure, close above it, which is absolutely fine, but there is nothing create any structure like a market taking out the previous candles high and then close below it, taking out the any sweep, any high taken out before the sell. So this after broken this high, market push rapidly in a downside, there is no indication for the reversal, okay. And same thing is here, but market taken out the previous high. So scenario is a different. Okay, that you can take risk for the sell is here. Okay, so that's why I take risk entry for the sell here. And another confluence is here, market create liquidity supply on the higher time frame. Now let's see how it actually work. Now we can see market again taken out the previous candle high and close above it. If market close below it, then we can take entry for the single candle order block mitigation based entry. Okay, market close below it. Okay, so in this case we can sell again here and put the just above the stop loss, and target will be same. And one more thing, if market break this low which is here, actual M5 low is here, and this is our recent low. If market break this low, then we will switch our stop loss on a break even, and this low is our major low M5, which is medium time frame. And once market break this low, then don't need any more position until broken the recent high in M5. Okay, I will show you exactly. So let's see what happened next. And this is a very interesting thing is here. Alright, so as you can see, market break this low which is here, and in this case you can move your stop loss and break even. And when you put your stop loss is here, which is here, and then these two position in a profit, and this is on a break even. If market push upside, because this is inducement for the M5 obviously, and market maybe tap on this demand and then push higher, correct, then in this case you can at least cut out on a break even. Okay, you can cut your position on break even, because in M15 engineering liquidity is still available for the sell, because we are only tap on the inducement, which is already 50% chance for the sell and buy. Okay, now let's see how it actually work. And you can see market break the major low which is here, and you can take a little bit partial is here, and market broke this major low which is here. And after taking out this M5 low which is here, and after taking out the M5 low, when we can take another position for the buy and sell. And what you should do in this case, you have to wait for the at least, as I mentioned in starting, that price must be taken out the at least this high before to add more position in M1 time frame. Okay, because market break the low is here. Okay, if you are trying to add more position in M1 time frame, market never follow any single time frame forever. Okay, so that's why you have to wait for the at least develop more price action before the entry. So market break this structure. Okay, and then what happened, market tried to push upside. Once market taken out this high, then we can add more position in M1 time frame. Okay, and when market push downside like this, and then market must be taken out this high and then again sell. And I'm talking about the medium time frame. Okay, because we are in various market tap on the supply zone, and you have to wait for the M5 recent high has been broken and then sell, recent high has been broken and then sell. Okay, until broken this low, correct. Now let's see what happened next after this. Alright, so as you can see, market did not break this high, but market create new low which is here like this. Okay, so where is our new inducement is here. Market must be taken out this high before the sell, and this is our inducement for the medium time frame, and I'm talking about the M5 structure. Price must be taken out this high. When market taken out this high, we can sell more position into M1 structure. Okay, let's see what happened next here. After taking out this high, now let's switch into the M1 to add more position for the downside. Okay, now let's see. Price taken out the previous M5 which is here, and in a left side if there is available, then we can see this is our supply zone when we can take entry for the sell. If market tap on it, then we can sell. If market sweep this high, okay, and create and close below it, then we can sell. And another type of entry we can add like this, okay, and create new structure something like this, and sweep previous high and close below it, then we can again sell. Correct. If not, okay, then what we can, another type of, again mitigate this supply zone, okay, and then push downside and enter here for the sell. And you can stack multiple position our IM5 main low. Correct. Now let's see how price react on this level. Okay, as you can see, market sweep this high, which is sign of the reversal. This is our entry type 3. Why? Because market sweep this high. If market did not sweep this high and price generally push downside like this, okay, like this, then you have to apply entry type 2, taking out this high and close below it and again sell here, okay, because price close above it, okay, then you have to apply entry type 2. But market create situation here, you can see market price has been taken out and close below it, so you have to apply entry type 3. In this case, when market close below it, then you can add another position is here on the next candle open and stop loss just above it. In this case, doesn't matter supply is a tap or not, okay. When market tap supply, then you have to apply entry type 1, okay. So in this case we are applying here entry type 3 because market sweep the previous candle high, okay. So this is our next entry and target is here. Correct. This is M15 main low, and if market give any opportunity between this high and low, then we can add, and between this high and low we can add multiple position in a downside, okay. So now let's see what happened next. Market trying to push higher. Why market trying to push higher? If you can see in a left side, this is our minor order block. This is also known as a smart money trap, okay, because they are buying here and trying to push higher because market momentum is a bullish, they anticipating price go higher. Correct. And then what happened? Market push downside, and in this case what we can here, we can add more position is here and target is same. Why I'm adding here? Because market sweep the previous candle which is here like this. Correct. And that's why I add more position at this point, okay. And one more reason to add here, because this is our smart money trap and they are anticipating price go higher, and below it there is one more smart money trap, okay. Let's see what happened next. Market tap here and gave a reaction and create new low structure is here. This is a very deep thing you have to understand. Market break this low and this is the last candle and market sweep this high, okay. So this is an indication for the downside. Correct. And then what we can here, we can add one more position is here, put the stop loss just above it. Correct. And this is a sign for the reversal because market create new structure, high taken out and close below it, then we can add more position and target is the same M15 measure low. Now let's see. You can see how price smoothly work here. Market sweep this previous high and taken out this high and close below it, and we can enter on the next candle which is here and put the stop loss just above it. Okay, we can also put the stop loss just above it, which is less than 1 pip, but this is not a sense. Okay, so I put the stop loss just above it, which is here, correct? And in this case you can see market completely respect as per our entry strategy. Okay, so this is our next entry, which is we can enter here. Okay, now let's see. Some people get confused here that why I did not add more position is here. Why? Because market did not sweep this high, just close above it. So this is not enough for the take entry. Once market close above it, then you have to apply entry type 2. So in this case you can see there is not any indication for the reversal. Market just close above it. If market sweep this high, then we can add more position. Okay, then what happened? Market push downside, break this structure. Okay, I'm talking about the minor time frame. And then what happened? Market create this inducement and this is entry. Okay, but why I did not take this entry is here. Look at the left side is here. You can see in a left side this is last order block is here, and everyone buying here. Why? They anticipating price push higher. Market tap here and give a reaction and push downside, and then again everyone selling here to follow the flip, and this flip will be a liquidate. If market taken out this high, then I'm interested for the sell. Let's see what happen next, or maybe price downside, because we are already in 3 position. Okay, let's see. As you can see here, market taken out the previous high, which is act like a D2S, demand to supply flip, and then what happened? Market sweep this high and close below it. So what we can here? We can sell here now here and put the stop loss just above it. Okay, I hope you understand what I explain here, and this is helpful to you understand the higher time frame picture to lower time frame picture and medium time frame structure. In this case you can see there is no need to identify the higher time frame like 4-hour, daily, weekly, monthly structure, because we are trading on the lower time frame in M1 time frame. In this case M15 is major structure, M5 minor structure, or you can say a medium structure, and M1 for the lower time frame entries. So basically these 3 time frames are enough for a day trader, and this will help you a lot to understand that how we can stack multiple position and how you can trade counter trend. And this is a very important video, and if possible keep watch a multiple time, because lot of new things are here and maybe it's take a lot of time to understand things. If you repeat this session time to time when you are free and apply in your live trading and backtesting, then you can definitely improve your trading skill. Thank you so much watching the entire episode. See you in the